I want us to take a trip back in time. I want you to mentally transport yourself back to December 2020. Close your eyes and remember the atmosphere. The world is locked down. The streets are empty. The economy is frozen. But inside the central banks, the printing presses are running red hot. They are printing trillions of dollars out of thin air to keep the system alive. Fear is the only currency that is circulating. Now, I want you to imagine two investors, two friends. Let's call them George and Alex. Both of them have worked hard. Both of them have managed to save exactly $20,000. This is not play money. This is their life savings. It is the sweat of their brow. And both of them are looking at the horizon, seeing the dark clouds of inflation gathering, and they know they need to do something. They cannot just leave the cash under the mattress. George is a conservative guy. He goes to his bank, he sits down with a financial advisor in a suit, and he asks for the holy grail of investing. He asks for safety. The advisor smiles and says, "George, don't worry. There is an investment that never fails. It is guaranteed by the greatest superpower on the planet. US Treasury Bonds." George listens. He puts his $20,000 into TLT, the ETF that tracks long-term US Treasury Bonds, and he goes to sleep that night feeling secure. He believes he has protected his future. Alex, on the other hand, is a realist. He doesn't trust suits. He trusts numbers. He looks at the world and sees that we are entering a new era, an era that is hungry for two specific things: energy to move the world and computing power to evolve the world. He decides to ignore the paper safety of bonds. He decides to split his money into the real economy. He puts half into an energy giant and half into the heart of the tech sector. Fast forward 5 years, we arrive at today, December 2025. The two friends meet for coffee and open their brokerage apps. The result is not just a difference in profit, it is a massacre. It is violent. One of them has lost nearly half of his life savings in a risk-free investment. The other has tripled his net worth. Today we are going to analyze this financial crime scene. We are going to dissect exactly how the safety of bonds became the biggest trap of the decade, and why real assets, hard assets in tech, are the only path to survival. Part 1. The crash of safety, the bond trap. We have to start with the blood. You need to understand exactly what happened to George and his bonds, because there are still people out there today telling you to buy them. In 2020, the TLT ETF was trading at its all-time highs, near $170 per share. George's logic was simple and traditional. If the stock market crashes, bonds go up. If everything goes well, I get my interest payments. I cannot lose. This logic worked beautifully for 40 years, but in 2020, the cycle ended. The central banks made a fatal mistake. They printed too much money. The result? Inflation. And when inflation arrives, the Federal Reserve has only one weapon to fight it: raising interest rates. Now, usually this is the part where economists lose you with boring theories about yield curves and duration risk. Forget the theory. I want you to visualize this instead. Think of a bond like an ice cube. As long as the Fed kept the room temperature freezing cold at 0% interest rates, the ice cube stayed hard. It was solid. It was safe. But in 2022, the Fed didn't just turn up the heat. They turned the oven on to 400 degrees. They raised rates from 0% to 5% in record time. What happened to George's ice cube? It didn't just melt. It evaporated. The value of his bonds was burned alive by the interest rates. The result for the TLT ETF was a crash. From $170, it plummeted all the way down to below $90. We are talking about a drop of minus 47%. George, who put in $20,000 to be safe, opens his account today and sees the value of his shares sitting at roughly $10,600. He lost nearly half his wealth in the safest investment in the world. But what about dividends defense? Now, I can hear the critics in the comments already. But wait, George collected interest payments, yield, during those 5 years. You can't ignore that. You're right, let's be precise. During these 5 years, the bonds paid George a yield. If we add those dividends back in, maybe his account isn't at $10,600. Maybe it's at $12,000. Does that change anything? Absolutely not. Think about it. What is the point of collecting a 2% or 3% coupon when the underlying asset has crashed by 47%? It is like trying to put out a forest fire with a water pistol. And it gets worse. While George was losing 47% of his capital, inflation was eating away at the purchasing power of the money he had left. The cost of living went up 20 to 30%. So, in real terms, George didn't just lose money, he was decimated. The lesson is harsh. In a world of unlimited debt printing, bonds are not safety. They are a mathematical certainty of losing purchasing power. The turning point. Now, looking at George's account, you might feel sorry for him. You might feel scared. But wait, don't feel sorry yet. Because at the exact same moment in the apartment next door, Alex was opening his brokerage app. And what he saw on his screen wasn't a minus 47% loss. It was a number that will make you jealous. It was a number that proves that while one world was dying, another was being born. Let's see how he turned this crisis into a jackpot. Part 2. The Realist Portfolio, Energy and Tech. Alex didn't trust governments to keep their promises. He trusted human needs. He asked himself a simple question. What will the world desperately need in the next 5 years, regardless of what the politicians do? The answer was twofold. We need to move, heat our homes, and power our factories. Energy. We need to calculate, process data, and automate. Technology. So, he split his $20,000 into 2 equal buckets. $10,000 into Exxon Mobil, XOM. $10,000 into NVIDIA, NVDA. Let's see what happened. Move number 1. Black gold, Exxon Mobil. Do you remember 2020? Everyone said oil was dead. The price of oil had briefly turned negative. The green energy narrative was at its peak. Investing in oil companies was considered dirty. Exxon Mobil was called a dinosaur. The stock was dragging along the bottom, trading around $40. But Alex knew something fundamental. The world cannot function without oil. Ships, planes, trucks, plastics, fertilizers, they all run on oil. You cannot turn off the tap overnight. With his $10,000, he bought 250 shares. What followed? The energy crisis, the war in Europe, the realization that wind turbines and solar panels were not enough to power the grid alone. Exxon Mobil became a cash printing machine. They reinstated dividends, they bought back shares, they posted record profits. The price went from $40 to over $120. And we haven't even counted the massive dividends Exxon paid out every single quarter. The result? His $10,000 turned into roughly $30,000, including dividends. Profit? 3 times? 200%? While George was losing money to inflation, Alex was using inflation to get rich, because oil is inflation. Move number 2. The digital brain, NVIDIA. Here, Alex took his risk. He put the other $10,000 into technology. But not just any technology, not social media apps, not advertising companies. He looked for the company that was building the shovels for the future. In 2020, NVIDIA was famous for gaming cards, but Alex saw the shift to data centers. The price, split adjusted, was around $13 to $14. Alex bought approximately 700 shares. We all know what happened next. ChatGPT launched in 2022. The entire planet realized that AI is the new electricity. And AI needs GPUs. It needs NVIDIA. The company became the most important enterprise on Earth. It achieved a monopoly on the future. The stock went from $14 to over $120 plus. The result? His $10,000 turned into over $84,000. Profit, 8 times, 700%. The monopoly rule. Now, I know what some of you are thinking. Oh, come on, it's luck. You're just picking winners with hindsight. No one could have known. Wrong. Alex didn't have a crystal ball. He had the monopoly rule. The rule is simple. If a company can raise its prices and you still have to buy their product, you should buy their stock. Look at the world in 2022 to 2023. Did we need gas for our cars? Yes. Did Exxon raise prices? Yes. We paid it. Did companies need AI chips? Yes. Did NVIDIA raise prices? Yes, they paid it. It wasn't luck. It was observation. George bought government promises, bonds. Alex bought pricing power, monopolies. That is the difference between going broke and getting rich. The verdict, the final score. Let's put the numbers side by side. George, the bond investor, started with $20,000. Current balance, $10,600. Performance, minus 47%. Status, poor, frustrated, and unable to retire. Alex, the realist, started with $20,000. From Exxon, $30,000. From NVIDIA, $84,000. Current balance, $114,000. Performance plus 470%. Notice the difference. We are not talking about a small margin. One man lost half. The other multiplied his wealth by nearly 6 times. They started with the same amount on the same day. The only difference was their mindset. The lesson for 2026. Why did Alex destroy George? The secret is hard assets versus fiat promises. Don't lend to printers. A bond is a promise that the government will pay you dollars in the future. But if the government prints billions of dollars every day, the value of that promise hits zero. It is guaranteed poverty. Buy real things. Exxon owns oil in the ground. It is tangible. In an inflationary world, tangible assets go up. Buy innovation monopolies. NVIDIA has no competition. When a company is irreplaceable, it has pricing power. It can raise prices faster than inflation. What do we do today? Now you might say, okay, but NVIDIA has already flown. Oil is up. What do we buy now? The mistake many of you will make is running to buy NVIDIA at the top. Or worse, buying bonds now because you think they are cheap. The strategy remains the same, but the vehicles change. You need to find the Exxon and NVIDIA of 2026. You need to find the new oil. What is the physical commodity the world will run out of in the next 5 years? Hint. Is it copper for the AI grid? Is it clean water? The new NVIDIA. Which tech sector is trading at $15 today but preparing a monopoly? Hint. Is it the space economy? Is it humanoid robotics? You don't need to guess. The data is out there. You just need to stop listening to George and his banker who are living in 1990. You need to think like Alex. In the next few videos, we are going to hunt for exactly these two things, the next critical commodity and the next tech platform. But warning, before we run to buy, we need to look at something disturbing. While we are looking for opportunities, the CEOs of these very companies are selling. Jensen Huang of NVIDIA sold. The executives at the oil majors are selling. Jeff Bezos is selling. Why? What do they see on the horizon that we are ignoring? Is the recession closer than we think? In the next video, we are going to open the insider's file. We are going to track the billions of dollars leaving the market right now. And then this is the video that will determine if you keep your profits or give them back to the market. Subscribe, hit the bell. Don't be a George, be an Alex. See you at the top.